Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about VF Corporation Quarterly Report. VF Corporation offers a diverse range of products across various segments. The company's outdoor segment provides outdoor apparel, footwear, equipment, and accessories under brands such as Timberland, The North Face, Smartwool, Icebreaker, and Ultra. The active segment includes style-forward and weather-ready footwear, apparel, and accessories under the same brands mentioned above. Additionally, it offers performance merino wool and other natural fibers-based apparel and accessories. In the work segment, VF Corporation provides high-performance apparel and accessories based on natural fibers under Timberland and Timberland Pro brands. It also offers work and work-inspired lifestyle apparel and footwear under Dickies brand. Furthermore, the company operates various other brands such as Vans, Kipling, Napapijri, Eastpak, JanSport, which offer youth culture/action sports-inspired and streetwear apparel, footwear, and accessories. Handbags, luggage, backpacks, totes, and accessories, outdoor-inspired apparel, footwear, and accessories. The company sells its products through various channels including specialty stores, department stores, national chains, independently operated partnership stores, mass merchants, direct-to-consumer operations such as retail stores, concession retail stores, e-commerce sites, and other digital platforms. The stock price of VF Corp has dropped by 20.66% over the past year due to several negative developments. One key event was the sale of its Dickies brand, which led to a 5.6% drop in the company's stock price. Despite reporting better-than-expected revenue and earnings per share for the second quarter of fiscal 2026, the stock experienced a significant drop of 12.46%. This downturn was likely influenced by forward guidance or other concerns not explicitly detailed in the earnings highlights. The third quarter of fiscal 2026 earnings release also contributed to the decline in VF Corp's stock price. Despite delivering growth and beating revenue and operating income guidance, the company's shares tumbled due to several factors. These included weak fiscal Q1 2026 guidance, which projected revenue below analyst consensus, ongoing struggles with the Vans brand, and the impact of tariffs on operations. VF Corporation maintains a market capitalization of $7 billion, broadly in line with the industry peer group. VF Corporation trades at a higher price-to-earnings ratio of 80 times and a higher price-to-book ratio of 5.01 times relative within the industry. Despite the industry trading at relatively low valuations, the stock commands a premium over its peers. Unless supported by a strong economic moat, the company might not appear to be the most attractive opportunity in the sector and is likely fairly valued at best. The company exhibits a very high leverage profile, with liabilities accounting for 84% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This makes the investment case highly unfavorable. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of recent financial performance. In Q3 FY26, revenue experienced a significant increase of 10% to $2.5 billion. This growth was primarily driven by strong sales in the Americas and Europe. Specifically, the Americas segment reported a 12% increase in revenue, with notable growth in the US and Canada. The Europe segment also saw a 7% increase in revenue, fueled by expansion in Western Europe. In contrast, there is no clear indication of what drove the decline in revenue on page 9, where it is noted that revenue decreased by 2% to $3.4 billion compared to the same period last year. Without further information, it is difficult to pinpoint the specific factors contributing to this decline. The net income of a company remains stagnant, showing no change from the previous year to the current year. However, upon closer inspection, it is revealed that the net income actually decreased by $38,000 $928 to $0. This seeming contradiction highlights the complexity of financial reporting. A more detailed analysis reveals that while revenue growth was reported for both short-term and long-term periods, this increase did not translate into higher profits. In fact, net income decreased by 15% compared to the same period last year, with earnings per share (EPS) also declining by 14%. These figures suggest that despite increased revenue, the company's profit margins may have been negatively impacted by changes in other income or expense items. The lack of direct information on profit margin changes makes it difficult to pinpoint the exact cause of this decline. However, it is clear that the company's financial performance has suffered, with net income and EPS both experiencing significant decreases. The company's financial performance has been impressive in terms of generating operating cash flow. A notable achievement is the significant amount of cash generated from operating activities, totaling $637.9 million for the 9 months ending December 2025. This indicates a strong ability to produce cash from its core business operations, which is a crucial aspect of a company's financial health. The positive operating cash flow suggests that the company has sufficient liquidity to meet its short-term obligations and invest in growth opportunities. Overall, this is a positive sign for the company's financial stability and future prospects. Management's outlook on company strategy: the management is optimistic about the company's future prospects, as evident from their recent statements. They have expressed their intention to continue evaluating opportunities for share repurchases under their existing authorization. This suggests that they are committed to returning value to shareholders and maintaining a healthy capital structure. In addition, management has emphasized the importance of reducing leverage and reinvesting cost savings to drive growth. By focusing on debt reduction and strategic investments, the company aims to achieve profitable and sustainable growth in the long term. This strategy is expected to position the company for continued success and create value for its stakeholders. The company's financial records reveal a history of dividend payments. According to the provided information, the company has indeed paid dividends, with 2 separate entries confirming this fact. On page 6, it is stated that the company paid dividends totaling $105,508. Furthermore, on page 8, it is noted that the company paid dividends on common stock in March 2024 for a total of $105,094. These records demonstrate a clear pattern of dividend payments by the company. But that concludes the financial summary for VF Corporation. Feel free to comment below, and I will be happy to answer them when possible.